Hi, you might have heard of the Singapore Vaccinated Travel Lanes and you might be busy planning for your holidays, but as an investor, we should not miss out on opportunities. Hi, I'm Alvin, a CEO of Dr. Wealth, and I'll be sharing with you 5 sectors you can bet on this Singapore reopening play. The usual disclaimer, pause and read it if you need to. Okay, so I want to give you a brief update about what the government has done in terms of the responses to Singapore COVID cases. So the very first case that Singapore had encountered was in 23rd Jan 2020. That was the first case that was imported into Singapore, and it was not until 7th April 2020 that the circuit breaker actually kicked in. So that's our version of locking down the city-state, right, and to really restrict the movement and interaction between people. And then it was only until around 1st June 2020 we got the numbers under control, and that was the phase 1 opening, right? So you can see the initial spike over here, and it was pretty managed well, and we been able to bring down the numbers and figures, and that pretty much stayed low for quite a while, right? Quite many months thereafter. And we begin our vaccination in end 2020, December 2020, and with by now, which is around middle of October, we have vaccinated about 83% of the population. There's about 4.7 million people with at least 1 dose, right? And you will also notice that a lot of cases started to spike even more than what we had last year during the circuit breaker period, and yet we are not closing our doors, we're not closing our borders. What has changed? The vaccinations, definitely, because for those who have been vaccinated, even if unluckily you get the virus, right? The symptoms are usually mild or non-existent at all. 98% of the vaccinated have 0 to mild symptoms, right? So that becomes a very good natural protection against all this viral infection, and there's no reason why we should close the borders just because we're to bring the numbers down, right? So it's no longer about the cases, but it's about the healthcare capacity, whether we can handle the serious and the severe cases and make sure that they can recover in time. And also not to forget that there can be other people who are relying on the healthcare system that is not COVID related, and we want to have enough room for those purposes as well. So that focus has shifted towards healthcare capacity rather than cases. So that is how Singapore has taken a stance that we are not going to live with like 0 COVID cases. It's more like we are trying to live with COVID, and it's time that we do something about rebuilding the economy and make it stronger from where we left off last year. So the very obvious sector that will benefit, the number 1 sector will be aviation, because that's where people start to travel again. That has been pretty much restricted since the circuit breaker in April last year. And even though there are some routes that were being able to fly in the past few months, but the number of tourist or leisure travel is almost non-existent. Okay, so it was a very good news that Singaporeans received this Vaccinated Travel Lanes list of countries, and many of them are pretty popular places to visit, and I believe that a lot of Singaporeans will embark on these trips, especially we're nearing the end of the year, right? So the VTL countries started with Brunei and Germany, and then it expanded to Canada, Denmark, France, Italy, the Netherlands, Spain, UK, and US. So additional 8 more countries. And in November onwards, there are 3 more: South Korea, Australia, and Switzerland. So these are really pretty popular destinations. And we also saw that the SIA website crashed on the day that the VTL countries were announced, right? The second batch, the 8 countries. And there were even a queue outside the SIA outlet in Orchard. So that is how bad people actually wanted to travel, right? So given this new policy and new measures, the travels are actually more encouraged now, and people that are less resistant to traveling during this period are willing to take that risk and buy the tickets and fly out of the country. And we also have seen that in 2021, the Changi Airport passenger movements have gone up gradually, right? So I do think that with this VTL, the number will shoot up even further. But don't forget that we are still very, very far from what we have, the numbers that we used to have before COVID. Okay, so you can see in 21.7, 21.8, 21.9, we are dealing with like 60 over million passengers in a year. And this year to date until September, we only have about 1.6 million people, right, that are actually traveling. So we still have a lot of room to catch up. Okay, so I do think that the aviation industry is starting to really see a more sustainable recovery, not that kind of lockdown, restrict, then open up, then restrict again. I think we are now recovering for good with a majority of our population being vaccinated. And some of the aviation play that are obvious will be SIA. And SIA expect to increase its passenger capacity to 37% of pre-COVID levels, right? So closer and closer to the mid-level mark by the end of 2021. And in September is at about 32% of pre-COVID levels. So these are very encouraging signs. And of course, with the VTL announcement, SIA share price jump up 8%. And that is a sign that even investors should expect improvement in SIA financial reports in the coming quarters, because the stock market is always forward-looking, right? So they have priced in some of this optimism already. And in terms of another candidate for aviation play would be SATS, okay, SATS, and their aviation revenue, okay, has plunged 67% of pre-COVID figures, and the resurgence of this flight would actually recover the lost revenue. And now they are relying more on the non-aviation revenue, which is good. At least they have some form of diversification. During this time, they were doing a lot of more of the land-based kind of food distribution services, and that really helped prop up the company. And same thing, once the VTL announcement has been made, the share price has jumped up about 4%. Okay, so this is also a good sign that the market is reacting to this VTL news, right? To this opening up news. So the next sector will be tourism. Visitor arrivals is still pretty flat line for the past within this year. Okay, especially from May-June period, you can see there's actually a dip over here, right? Due to I probably think it's due to the tightening measures, so less people get to visit Singapore. Then after that, we loosen up again. We are back to normalcy, right? As in post-COVID normalcy, right? Not pre-COVID normalcy, and we'll expect that this will jump up, right? Because a lot of all these VTLs are reciprocal arrangement. I also believe that there will be more different kind of policy that will encourage tourists to come to Singapore as well, right? So I also think that these numbers will go up. It's not just about Singaporeans traveling out of the country, but also tourists visiting Singapore. And looking at our tourism numbers, there are a lot of upside, okay? Because if we just look at Q1 this year versus Q1 last year, which was still pretty much pre-COVID period, the numbers have plunged a lot, right? Like shopping has been down by 93%. These are tourist receipts, okay? Tourist receipts, that means only counting the tourist expenditure in Singapore. And accommodation is down 90%, food, F&B is down 88%, sightseeing, all these are down 93%, and other tourist receipts down 88%. So you can see it's actually pretty bad for the tourist industry in Singapore, and definitely it is time to bring in some of the tourists and increase the spending over here. Right, so I do believe that there is a lot of upside to recover from, and of course I don't think or it is naive to believe that we will straight away go back to normalcy, right? Pre-COVID figures. I don't think that's possible, but recovering a large part of their lost revenue is very, very possible. So subsectors like retail, hospitality, medical, transportation should all see improvements, because we can see there is a lot of room to cover. And tourism plays, two obvious candidates will be, the first one is Genting, right? Because it's one of the two integrated resorts in Singapore. They have Resort World Sentosa, casino, hotels. It's a very popular tourist attraction. And of course, we want more tourists to come here so that they can spend more and boost our economy, right? And Genting will be one of the hotspots to do that. And Genting revenue has tanked 57% in 2020. Okay, so any increment in this tourist expenditure will definitely increase Genting's revenue. And likewise, after the VTL announcement, the very following day, Genting share price jumped up 5%. So that's a good sign as well. The next company is not so direct play, but it is relevant as well. That's ComfortDelGro, because tourists will also need to move around, right? They can't just walk around on foot, even though Singapore is very small. And most of them will probably take taxis, right? instead of taking trains or buses. It can be really confusing for people who are new to the country, right? So they will take taxi because it's most convenient. And the taxi segment has declined 17% in 2019 to 12.5% in 2020. Okay, and that's largely due to the rental waivers that was extended to the drivers. And I was able to get on a ride on a taxi sometime back. It was still during COVID period, but people were allowed to go back to work. So I was conversing with the driver, and I was like mentioning that it should be better. Business should be better because people are traveling. People are going back to office, and he should see better earnings as a taxi driver. He was saying that yes, during peak hours there are more people taking the taxis, but during the non-peak periods there were nobody actually because people are working and not running around, right? And he was sharing that the reason is because pre-COVID period, during the off-peak periods, he was actually taking a lot of tourists, right? Taking them to sightseeing, taking them to shopping centers, taking back to hotels. So this revenue was gone, right? Because tourists have not came back even until now. And the ComfortDelGro had to extend a lot of all these rental waivers, and that declines ComfortDelGro's revenue. Alright, so if let's say these tourists come back, the waivers can discontinue, and as the driver's earnings go up, so ComfortDelGro revenue would actually increase as well, right? So the news actually increased ComfortDelGro share price by 1% after the VTL announcement. Okay, not by much, but at least the share price is gradually recovering. Okay. The third sector that we're going to talk about is hospitality, right? Of course, you can lump it with tourism as well, but I thought that hospitality worth a dedicated mention. Okay. So for hospitality, of course, it's very bad. It has been very bad because tourists are not coming here to stay, and a lot of the hotels lost a lot of revenue. But some part of this revenue were being recovered or cushioned by quarantine measures, right? Because some of the people who are being quarantined are quarantined in a hotel, and government pays for it, at least at the initial phases. Okay, and government also give vouchers to Singaporeans, and some of them have been using it for staycations, right? But all this cannot be sustainable in terms of recovery for the hotel sector, because now we are talking about home quarantine is allowable, right? So they do not need to go hotel to quarantine, and that would also decrease the demand for these hotel rooms. And since the VTL is open up, that means that Singaporeans can go overseas instead of just doing staycations in Singapore. So that means that the hospitality sector need to really rely on the tourists to have a more sustainable recovery for this sector. Occupancy rate has been rising. The average occupancy rate in Singapore hotel has been rising, and 63% is the highest, right? It's the highest level this year. But this is still below the average of 87% pre-COVID period, right? So there is still some room to go, and later we'll also look at another indicator because it's not just occupancy, right? But the room rate, did it discount further to increase their occupancy? If that's so, then their revenue don't go up that much, all right? And let's look at the other indicator, which is revenue per available room, or RevPAR in short. And the good news is that this is also rising from $60+ at the start of the year to $103 in September 2021. Okay, but this is still below half of what it was before COVID. That was around $220.82. All right, so you can see that there's still room for improvement. Okay, maybe not so much of the occupancy rate, but more on the room rate. Okay, they need to increase the price of each room to actually increase this RevPAR and eventually the revenue of the hospitality sector. Hospitality Plays, two ideas from here. One will be the Far East H Trust, because this is one of the hotel stock that is mainly in Singapore. They run 3 hospitality brands: the Village, the Oasia, and Quincy. Right? So they will benefit from Singapore's border opening, and when tourists come over, they can be one of the options for them to stay, and they should be able to increase room rate as the demand goes up. So the good news is that the Far East H Trust jumped up 3% after the VTL announcement, right? So there is some reaction from the investors as well. And then the second company will be Ascott Trust. Okay, so they are the largest service apartment company in the world, and they will benefit from more business travels, and companies may start to send expats over again, and try to get back close to where pre-COVID were, to all the processes in foreign countries, right, like Singapore. Okay, so it's good for expats, mainly used by them, and news did very well for Ascot. The share price jumped 6% after the announcement. Fourth sector will be real estate. Okay, and we all know that real estate prices are going up despite COVID. Okay, maybe because people have been like saving a lot of money, not traveling, and they start to buy property, buy houses, invest in properties. So Singapore private home prices have actually rose for 6 consecutive quarters. So that's quite amazing, right? That is from pre-COVID until now. And we do see a dip in 2020 in terms of foreign buyers, right? Because of all the travel restriction, they may not be able to come here. And it's quite difficult, right, to sink in millions of dollars without viewing a house. And I think that actually slowed the foreign buying in 2020, right? So a lot of the buying at the moment is more on the locals, right? Or to zoom in on the luxury apartments, okay? So these are the higher end kind of residents, right? We can see in 2020 there's a dip, okay? And then in 2021 it actually recovered and went higher than pre-COVID levels. And we can see in particular the dark blue bar, this is the foreign investor, right? So it has almost doubled. Okay, so that means that foreign buyers are returning to Singapore and buying properties over here. So real estate agencies like your APAC Realty, PropNext have done very well in terms of share price. I think more than doubled for PropNext at least. Okay, and a lot of developers who have a lot of units and to sell now would also benefit from this red hot property market. So opening out the border would increase the demand, right, from foreign buyers, and I think that will fuel further price increment in the real estate sector. All right, the final sector that will benefit from this VTL arrangement or opening out of the economy are the banks. Okay, and the banks have done very well as though COVID-19 has never happened. Or we can flip it around and say that the banks actually was helped by COVID. Okay, their earnings, their revenue were actually spurred by COVID for weird reasons. Okay, because if I went to analyze the banks, a lot of the increment came from the wealth management products. That means people are actually investing more. Okay, whichever bank we look at, whether is it DBS, OCBC, or UOB over here, right? So all these are the jump in the wealth management revenue, right? So I guess again maybe it's back to the same logic with property. A lot of the Singaporeans are not traveling overseas. They save a lot of money, and they started to think about what should I do since it's idling and interest rate is low. Should we just invest the money, right? So there were a lot more investment that was done in both the real estate market as well as the wealth management products from the banks. All right, and with property, more property buying, that means the mortgage loan book will also go up. So our 3 banks have a big loan book that is related to mortgage as well, right? And with this more people buying properties, foreign buyers coming in, they will need more loans. Okay, so they improve, and as well as the transaction volume, right? Because now people are not really spending much overseas. A large part of that credit card kind of transaction fees do play a role in driving the bank's revenue. So when this transaction volume come out, whether is it that the tourists are spending in Singapore or Singaporeans are going overseas to spend, all this transaction volume will increase, and that will increase the fees for the banks. Okay, and with more mobility in the region, right? So the richer or more wealthy clients in the region would also probably buy more wealth management products from the bank, and thereby spur even more growth in the 3 banks. And another thing that's not mentioned here, but it's not related so much to the opening of the economy, but if let's say interest rates are rising, it's even better for the banks because then their interest margin will actually increase, right? So these are some of the considerations that are really giving a lot of tailwinds for the banks. Of course, there are risks. I will identify 2 risks that can actually hurt the recovery that we are talking about so far. The first is that the inflation is a watch area because we do see that there was supply chain disruption, there are not enough chips, there's shipping costs have been going up, coal prices have been shooting through the roof. So if this problem doesn't get resolved, right, and the prices will just continue to go up. Okay, and when they continue to go up, plus the demand are coming in thick and fast, right? Because every country now are trying to open up their economy, and the demand goes up but the supply is not keeping pace. That would cause the prices of all these commodities to go up even more, or the shortages to go even more dire, right? So all this supply shortage or high prices will slow business recovery, okay, and even hurt margin. So this is not what we want. We don't want that inflation to come in so high and so fast, such that the business find it very difficult to buy raw materials and it's just too costly to operate, and then everybody has shortages, right? And then recovery will put on the back seat. Okay, so inflation is a watch area. And even though a lot of central banks, including our Monetary Authority of Singapore, has mentioned that they think that this is a transitory kind of inflation, that means it will go away eventually. And most of them think that it is because of the sudden stopping of a lot of industrial activities last year during COVID that led to the disruption today. All right, so they think that it will eventually recover, and we should not pay too much attention to it. But the funny thing was that MAS actually tightened its monetary policy for the first time since 2018. They actually strengthened Sing dollar, and it was used to be flat, the slope. Now it's sloping slightly upwards. So that means that Sing dollar is going to strengthen against a lot of the other currency, right? And that is a response to rising inflation. Okay, because we import a lot of things, and having a stronger Sing dollar, that would make our purchasing power more palatable for people. All right, so there is a little bit of I don't know, contradiction between what they say and what they're doing. So it came as a surprise to a lot of people that why is MAS tightening at this point in time. So this is a watch area. You don't want the inflation to creep in too fast, such that it hurt the business recovery. All right, and then the second risk is a more obvious one. We don't know what kind of other coronavirus variants is going to come. Okay, if let's say, definitely there will be more variants, right? There are other variants out there already that we don't know. Okay, but so far our current suite of vaccines are effective against the new variants. But we never know, right? If let's say there is a variant that is resistant to our current suite of vaccines, that will sink us back to the lockdown periods again, and we need to get time to develop a new vaccines to combat against this evolved virus. Right, so that are all I have to share. Okay, I hope that it has been enlightening to you, that you have some trade ideas, you have some of these recovery play that you can latch on. Let me know what you think. All right, give me a thumbs up for this video, and remember to subscribe to our channel so that you will not miss any updates. Goodbye.